Good morning, everybody. Welcome to another day brought to you by Mike Bjork. Today is Friday, February 6th, the day we all been waiting for this week, right? Happy Friday to all. We do got a bit of economic news releases. Of course, the more important one for this week was the non-farm payrolls from brought to you by the Bureau of Labor Statistics. So back in December, we had a revision higher. So November and December numbers were revised higher, which is good news. And we had jobs of 329,000. We had a forecasted 230,000 for the month of January and came in at 257. So a little bit stronger in the month of January. But on the other hand, we had a flip side on the unemployment rate. So we had a 5.6 back in December. Forecast was supposed to go down to 5.5, and it went up to 5.7. So a little various. As we're seeing more and more people kind of getting into the job markets, we're going to see some of these movements and numbers here. So that's about. They were saying that actually it was like 12 months straight that we had 200,000 plus jobs for the year. So that's pretty good news there. That's hopefully we'll continue seeing that continue to grow and get that unemployment rate down a bit more. We also got the average hourly wages. So we had a contraction back in December of 0.2, and the forecast was supposed to go up to 0.3, and we actually jumped up to 0.5%. So that's about the largest increase we've seen in about 60 years. The hourly wages jump up that much. So that's also very good news right there. Let's go ahead and take a look at the headline news here. The stock market's up. It's liking all the numbers that we're seeing so far. Yesterday we had some earnings reports, so some good numbers in the earnings reports. Oil is up again. We're up about, so far this morning I saw about 51.80 per barrel, almost $52. So they're liking that, of course. Earlier on, that was in Europe. It was kind of trended a little bit initially here, but not as bad here. Greece was, concerns that there's going to be becoming a stalemate between the creditors, like in Germany and Greece, as to try to get this bailout resolved, the austerity measures. So that was crazy. That's still going on in Europe, more of a concern. We're kind of looking at it, but we kind of dismissed it when we looked at our earnings reports and looked at our hard data here in the U.S., and they were pretty content with it. Fannie Mae, as you can see, we've had some pretty sharp spikes lower over the past week, and as a result, so rates have kind of climbed up as a result. So today is no different. We've actually dropped quite a bit today. We dropped about 13 basis points from where we left off yesterday. So, and we even had a price for the worst yesterday as well. So that rates have went up a little bit from where we had yesterday's pricing. All right, folks. You guys have a wonderful weekend. We'll see you guys on Monday. Thanks so much for watching, and enjoy the weekend. Take care.